It's Sunday, the 21st of February 2016. This is a chart of the US dollar gold price. In the video I put up a couple of weeks ago, I talked about, I thought we'd had that move, that repeating range in this that $100 move into the lower half of this downtrending pattern, and I thought that there was a real potential that we could repeat this type of move in 2014 and 2015 when we got that second leg up. Making it a $200 move, and that's, you can see here that we did have that, that secondary move, and it really got a bit overbought there at 1260, and I think the pattern is really, it's consolidated quite well at the top of this range. It wasn't going to just break straight through that. I know some people were talking about 1300, 1350. It was unlikely to keep going at that. I mean, you can see that's the most overbought the gold futures have been in the last 3 or 4 years. So it's a really tremendous move, and I think it's a very positive move for the next few months. But I didn't think it was going to keep going there. So it's held that. It's been stopped by that upper downtrending line. I've drawn in a little what I think could happen here. We're starting to see a little bit of a little pennant flag sort of formation coming in. It's going to need to go through a bit of consolidation here. Nothing goes up in a straight line. And if it can use up a bit more time, maybe a week, a bit longer, I think that's very healthy, and then you'll see you move toward 1300. It's been stuck in this downturning range for a long time, so there's it's going to take a while to get through there. But I think real positive. Got to hold those levels and then move through. The Australian dollar gold price looks even more bullish. I'll just bring up that chart. Last video I put up, I suggested, I think it was this 5th of February bar, we'd just broken out above this consolidation range here, and I said predicting about a 1750 high. We actually overshot that, and it got to 1780, which is only about $50-$60 off the all-time high in Australian dollars, which is, you can see here, about 1835. So that was a really bullish move. That, once again, just really simple stuff, flag formations, but it's amazing how often they come off here. You can see here this was a similar, same move, had that about $150 flag, consolidation, breakout, and then a repeat of the range up. So now it looks like we should start to see 1650 should be our support level here. That was the previous range resistance, so you should see it start to form into support. And I don't really see, I'm not sure if there's any, at the moment it doesn't look like the Australian dollar gold price is going to come down anytime soon. I still think the bias is a weakness in the Australian dollar, and the gold price is sort of decoupled from the Australian dollar as well. So I think my thesis is that the Australian dollar will start trading on its own fundamentals, which I don't believe are that strong. Previously it's been it's been a Chinese story, but I think it'll start trading on its own fundamentals, and we're going to see this. It's going to hold these levels above 1700 now, and I think the bias is to the upside, especially with the US dollar gold price now decoupled. We're just going to I think that all-time high is probably within reach in the next few months, with the bias in the US dollar gold price higher as well. So that's where I think it's heading. So Australian dollar gold producers, even though they've probably factored in a lot of this upside now, if they're going to keep seeing buying pressure as well, with the rest of the Australian market pretty weak. But I'd still probably prefer those US dollar producers, since Australian dollar gold producers like Northern Star and Evolution are up more than 100% in the last 12 months. So whereas some of those US dollar producers have been beaten up more, and probably more upside in the stocks there.